This is Oliver Slope with Blue Line Futures coming to you from the floor of the CME here in Chicago with your grain market update. And it has been a very constructive week as far as the technicals go. Sure, we retreated in the first half, but that was warranted. We got up to technical resistance, psychologically significant $4 handle, and the 200-day moving average at about 402 on Sunday night. We retreated off of that, tested and held support 390. This was previous resistance, now becomes support as we head into the rest of the week and into the weekend. The barrier that the bulls want to see consecutive closes out above to keep the trend of lower or higher highs and higher lows intact is 4 to 402.5. This obviously is psychologically significant, but also represents a 200-day moving average. If we can achieve consecutive closes above here, wouldn't be surprised to see additional short covering from the funds take us closer to 412 to 415. This is the breakdown area from that August 12th USDA report. Now, moving over to the soybeans. Soybeans have had a nice run as well. Very technically sound. We've got just a stone's throw away from those June highs. 948 to 950 is that resistance pocket, but now running out of new news to propel the market higher, so we're just lingering. I think there's good support, 915 to 920. This is previous resistance and kind of a must-hold pocket for the bulls into the weekend. If we were to break down and close below, potentially that takes us back to $9, but still the trend remains intact. Higher lows, higher highs, stair-stepping higher. If we get positive news from China, or at least positive spin on headlines, potentially that takes us towards those June highs and psychologically significant 950 area. Wrapping things up with the wheat market, Chicago wheat has been bucking the trend. They leaded the way higher yesterday despite corn and beans being softer. Kansas City also managing to stabilize and get some ground under itself. A lot of this on a weaker dollar over the past week. That's certainly helping. We still think that there might be a little bit more opportunity in that Kansas City contract, but there's going to be a lot of resistance from about 432 to 440. Breakdown point, Fibonacci retracement, 100-day moving average, not to mention the RSI is in overbought territory. So we remain optimistic on grains, more so corn and soybeans. Wheat, maybe a little bit overdone for the near term. So that's what we're looking at. That's what you should be looking at too. This has been Oliver Slope with Blue Line Futures from the floor of the CME.